Hello and welcome to BQ Prime. I'm Hiral Dadia. We have it as Navin R. Sahadeo, Director Institutional Equities, Nuvama Wealth Management, formerly known as Edelweiss Securities, and Ronald Siyoni, Associate VP Sharekhan by BNP Paribas, joining us on the show. Welcome to the show, gentlemen. And today we're actually going to discuss what's in store for the cement companies and whether you will have the small cap cement companies which will actually play a catch up rally with the large cap peers. Naveen, let me come to you first. Clearly, if you see in the last couple of trading sessions, we've seen cement companies which have been on an uptrend. And with that, you've seen already two consecutive price hikes that have been taken. Due to the festive season, the demand was low, and that's something which is anticipated to pick up as well. What's your view from here on in terms of price hikes taken so far and what's in store from here on?
Right. So thank you first of all for having me on the show. See, our view is basically of a cautious stance on the sector. Now, our argument is that since, of course, the weak monsoon season and also the festive season is behind, and this is now driving a seasonal uptick in demand and also the prices. But what you uh, also have to factor in is that this price is merely a recovery, is what it should be seen as first, because you also saw a pretty sharp kind of a decline reported by most of the companies in the recently concluded September quarter. And this is despite the fact that cost has been shooting up at an unprecedented level. Now, having said that, while of course there was a temporary relief in the overall cost coming down, maybe like for the past month or so, but since the past few weeks, cost is again looking up.
Hmm.
So that basically increases the ask for cement companies to just meet the earnings estimates. We are not even discussing about earnings upgrades here. So whatever recovery in prices that you're talking, or recovery in demand that, like you mentioned in your initial comments, that's just seasonal. To me,
Hmm.
this was obviously, this happens every year, that post the Diwali function, I mean the Diwali is a festival, you see prices and demand both looking up. But are they really enough to be excited and drive any earnings upgrade? I really doubt. So my stance is definitely cautious, and I'll maintain that.
Sure. Thank you, Naveen, for your thoughts. Ronald, coming to you as well, how are you seeing the entire trend from here on? Do you think it's a one-off uptick, the way Naveen has mentioned right now that this is a post, festive season kind of a trend, but clearly the companies are actually playing with price recovery, and I mean we don't see any logical situation where we could even see talk about upgrades.
Yeah, hi, good afternoon. Our view is a little bit different. Actually, quarter two, we saw, multi-quarter EBITDA per ton from the cement
Mm,
companies, which was expected. But the sector has showed resilience in a seasonally weak quarter where, the cost, especially power and fuel cost, remained at the peak levels, which too for some companies may, pass on to quarter three. But quarter four onwards, we should see easing power and fuel cost to percolate in EBITDA per ton. More so, the companies are of the view, from April onwards, there would be further reduction in power and fuel costs, especially petcoke and coal prices. So, shutdown happening in China, and coal prices remaining under pressure worldwide
mm,
globally due to reasons known to the markets, that can be beneficial to the domestic cement industry. For the quarter earnings, we have seen, Ultratech, Dalmia reporting inline results, while ACC and Ambuja a little bit lagged on operational
mm,
profitability. JK Lakshmi outperformed on operational profitability. Ramco, reporting numbers today, which was reported much lower operational profitability. So we had seen in terms of demand, September was good, July, August was weak. October month, we are seeing a single digit, high single digit fall month on month in demand because of festive season.
mm,
But from November onwards, we should see demand catching up, and this should allow these companies to increase prices going forward. As you mentioned that they have been trying price increases. So as per our channel checks, 1 to 2% price hikes were attempted in the past couple of months. But we need to see whether this year needs to be stabilized over the second half of November. So just attempting a price hike would not lead to improvement in profitability, but this should sustain. So that would only sustain if demand momentum continues, and we expect this to momentum to continue. First being pre-election years, demand should look good. Apart from
Mm.
that, we see housing data is also the numbers which are reported by real estate companies. They have been doing better and better each quarter, despite hike in interest rates. 190 bips hikes and further interest rates expected. So still, the sales momentum is going on in housing sector. So these two factors should lead to better demand environment and should help these companies to see better volume growth and allow pricing increase going forward, and overall leading to an improvement in operational profitability.
Right.
In terms of
So Ronald, let me come in here. What's the quantum of price hikes that we could anticipate, wherein the companies will attempt, because sustainability is going to be key at this point in time, even if they attempt a price hike?
it would depend on regional mix, in
Hmm.
few markets where north and west region where you are seeing capacity utilization being very high. South, during this quarter have caught up with a healthy volume growth. Their price hikes may be attempted. So on an average, you can say 10 to 20 rupees per bag a price hike can be attempted initially to test the waters. And as demand picks up, then this can further go ahead. They can further take hike to up to 30 rupees per bag.
Hmm. Hmm. Right. So an average of 10 to 20, which could move up to 30 once we see the sustainability side of it. So Naveen, coming to you on this front, what's your, what's the quantum of price hike that you are anticipating, though whether they will translate into EBITDA per ton for the cement companies, that is something which we can catch up later on.
Sure. So the quantum of price hike that we're looking at is, of course, it could be about 4 to 5% from the
Hmm.
current levels. But what I'm trying to make a slightly broader comment
Hmm.
here,
Hmm.
that the industry has not displayed pricing power, in the sense that when the cost was actually going through the roof,
Hmm.
right? As in, you saw the price cost escalations like you've never seen before in the June quarter,
Correct.
and more evidently in the September quarter. That was the time when the industry should have shown some pricing parity. At least the prices should have just left flat. The point is that they actually saw a decline despite an adverse cost impact, suggests that the industry has limited or almost no pricing power. And like I said, of course, seasonal uptick in prices and demand will be there, but there is also looking up of the cost. Cost is not easing. Most of the
Hmm.
companies has commented that Q3 cost will just be flattish sequentially, or a marginal decline of sorts. And you have to now look at, in the past 2 3 weeks, your petcoke prices have recovered 20% from the bottom. Second is, there is also a levy of a busy season surcharge on railway freight, which is a good 15%, that has come back after a gap of almost about 2 years. In the COVID period, that was not there. It has come back now.
Hmm.
That impact is also anywhere between 30 to 70 rupees, depending on railway exposure. So, broader comment here is, while you expect seasonal price hikes and seasonal demand, which is nothing to be excited about, I'm saying industry has not displayed pricing power. So, I cannot be really expect them to take meaningful price hikes enough to drive any excitement, first of all. And we are completely ignoring the cost rise again.
Right. So, to this point of yours, Naveen, what is it that's catching, making, why are we seeing this kind of an uptrend in cement companies over the last couple of trading sessions? What would you attribute it to?
Of course, the market would look at it as the worst
Hmm.
being behind, right?
Hmm.
As in, the worst is behind, and typically, that's the way the markets typically operate. That now that the worst quarter is over, sequentially you will see an improvement. But to me, a slightest of disappointment would again, so this rise to me is more trading rather than structural, first of all.
Mm.
I'm in no position as an investor, if I'm at all, I have to take a view. I'm in no position to take a structural bet, positive bet on the cement in the first place, having seen the failure on the, industry's collective intelligence, as we call it, on the pricing power front.
Mm.
And then on the medium term perspective, we have another challenge, right, of Adani entering the space, and that clouds the outlook completely. One or two acquisitions that they make, or any big ticket expansion that they announce, and suddenly you will see, the entire rally fizzling out. Why go too far? I think just a few months back, maybe around May, or probably May or June, when Ultratech had announced their expansion plans of phase two, wherein they wanted to add about 22 million tons, 22, 23 million tons of fresh capacity to be completed by FY25. It sounded warning bells for the sector in terms of competition heating up, and the stock had gone all the way low to even 5,300 for that matter in a matter of few weeks. So I am not too excited.
Right. So let me ask you this. If you have to break the cement sector between mid caps and large caps, do you see mid caps catching up to what's happened with the large caps? Because as you mentioned, we've heard of a lot of capacity expansion plans coming in from larger players. And typically, when you look at a capacity expansion plan, it's at least a 4 to 5 year kind of a journey. Now, taking that into consideration, is that something which could be anticipated?
See, if the going is all well, when the
Mm.
going is all good in the sector, that is the time when, of course, there is a catch up that I can certainly happen.
Mm.
But in
Mm.
current scenario, for one to bet on a mid cap, I think unless there is a pure value play, like for example, a JK Lakshmi since the past 2 quarters have surprised on the earnings front.
Mm.
So there you can see some catch up, because the stock continues to trade extremely cheap, just around $60-70 EV per ton. So in such typical cases, yes, you can expect. But to make a broader statement, that the entire mid caps will now be doing a catch up to the large caps, I really doubt. I really doubt.
Right. In fact, Ronald, coming to you with a similar question in terms of specifically large cap companies as well, like an Ambuja and an ACC. Clearly, in historic past, if you see, we've lost efficacy, efficiency, and we've lost on the valuation front as well. A 13 to 14 times EV to EBITDA is what we are tracking versus a Shree Cement. So within the large caps also, do you expect a stock like an Ambuja or an ACC to play a catch-up rally within that circle?
Uh, Actually, CC in Ambuja, we do not have an active coverage, so
Sure.
we have do not recommend either buy or sell.
Absolutely,
But
that's fine.
in terms of large caps, we have seen Ultratech, Shree Cement, Dalmia Bharat, JK Lakshmi, Ramco Cements. These are the only top picks we are having in the cement space.
Mhm.
And we have seen mid cap or small cap players like Dalmia Bharat and JK Lakshmi, catching up with the valuation over the last 15 days because of their low EV to EBITDA multiples getting traded, and 10 to 15% odd increase in large cap companies like Ambuja or Ultratech. So they already have large caps have performed have improved their valuation over the trailing fortnight, but also mid caps companies like JK Lakshmi and Dalmia Bharat have outperformed over the fortnight period.
Right. So
Uh,
overall, if you have to look at FY23 as a whole, what's the kind of EBITDA per ton, are we anticipating in terms of a range if you have to look at a blended circle?
Um, I think we should expect, at least 10 to 15% improvement in EBITDA per ton. Our assumptions are based on, over the next 2 to 3 years, as capacities get added, the utilizations may, remain at same level or marginally improve. But on an annual basis, 3 to 4% price hike can be expected, as we have seen historically during, large capacity additions or fewer capacity additions. So 3 to 4% CAGR increase in price, and utilization levels remaining broader at similar or marginally up, then this should lead to improvement in operational profitability going ahead.
Right. And Naveen, coming to you on the same from your perspective, as you mentioned, though we did see a cool off in terms of domestic pet coke prices, international pet coke prices. However, on a month-on-month basis, we've seen some bit of an increase that has come in to the tune of almost around 5 to 10%. Now, if that trend continues, where we see some bit of an uptick coming in terms of input costs as well, how are you viewing the EBITDA per ton, basis the assumption that we don't see a major cool off in, input prices?
Correct. So, first of all, the pet coke price, domestic pet coke price has recovered 20% from the bottom
Hmm,
at 510. It's meaningful 20% from the bottom.
hmm,
And also there is other inflationary cost impact. Like I said, freight is going up and there is no respite in diesel prices and whatever. Broadly, because most of the companies reported EBITDA in the range of 600 to 800 rupees per ton. To me, if you were to look at a aggregate FY23 levels, uh, an EBITDA per ton of 1,000 or a little more than that is what, between 1,000 to 1,100 can be like the average for the full year FY23, which obviously means sequentially there is recovery. But I'll just reiterate for the sake of
hmm,
it that it is not going to drive. These were the estimates already made by the street. So it's not something. In fact, very honestly, I see a very fair chance of an earnings downgrade for FY24 because there the estimates continue to be high. And and if I may just please take your previous
sure.
question to Ronald on ACC and Ambuja. See, it's let me put it this way: the entire outlook from a medium-term perspective. I'm not talking about these
Hmm,
weekly price change and those kind of things. I think they are very near-term kind of a trading kind of an argument. But
hmm,
if at all I have to take a structural call on the cement space, you cannot ignore Ambuja. I think the entire sector outlook is dependent on Ambuja Cement strategy because they are the ones who said they want to double capacity in 5 years. They are the ones who said that they want to become the largest and also the most efficient player by 2030, which roughly implies a capacity CAGR for them of 15% plus. Okay. And also if they want focus on efficiency, which means and there are enough and more levers there, so they will have the cost advantage if at all tomorrow the industry goes into some sort of a pricing war.
hmm,
Having said that, Ambuja of course trades extremely expensive today, but if at all one has to take a bet on any stock, I think Ambuja is the only stock because in either scenario of a negative outlook or a positive
hmm,
outlook, you can safely assume outperformance from Ambuja because that is what going to, like I said, the deciding factor. And last point, the promoter has recently infused 20,000 crore over and above 7 8,000 crore that the balance sheet already has. In fact,
hmm,
much higher. ACC also has cash on books. So there is collectively almost 15, at least 12 to 13,000 crore kind of a cash which the group owns. So net net, they have enough cash. They have aggressive expansion plans. If they go aggressive, it becomes negative for the rest of the
hmm.
sector. But for Ambuja's investors, it will be seen as growth and efficiency. Hence, my view or our Nuama view, Edelweiss view is Ambuja is the only stock cement in the cement space one can look at.
Absolutely. So I think, I mean, it's a very, and I'm glad we have two different opinions, two different views that are coming in for the sector or overall as a whole, because that's when a viewer actually gets the entire perspective as well. However, thank you, Naveen. Thank you, Ronald, so much for joining us on the show. It was a pleasure to speak to you. Thank you and speak to you soon again.
Thank you.
Thank you.
Bye.